Welcome back, traders. This is Ryan with a trade review for my trades made on January 30th, 2024. And as you can glean from the title, we will be taking a loss today, but I'm going to walk through it and give you my thoughts during the trade. So I'm looking at the market with a bullish bias here. Prices came down into this fair value gap, and I'm looking for price to come up and use this fair value gap as an inversion and looking for the buy side liquidity above these highs. So let's go ahead and start the clip. I'll be speeding through this. And this does take a while. Right now it is 8:30. Waiting for the news to hit at 9 o'clock. I'm looking for the open. I'm thinking the open at 9:30 may inject some volatility into the market to help us push it up. Here you can see that I saw that there was a small fair value gap, and I went ahead and entered into two contracts with my stop below the swing low here. Now, admittedly, this was a bit early. Price did come down into this fair value gap, but it didn't really go deep into it. So what happens is that price will go deeper into it, and I'll take a stop out right here. Admittedly, this was too early. I needed to wait for a market structure shift. Here we created a swing high. Ideally, what will happen is price come down to take some more liquidity and create a market structure shift and a breaker formation. That would be the ideal. So I just got a little too eager here, and I'll be taking a first loss for about $50. Now again, this was non-farm payroll week, so we can expect somewhat of a choppy market, and that's kind of what happened today. It was very choppy and it was hard to trade both short and long. Here we see price swept the liquidity down here. So it's getting close to 9 o'clock. That's when we're going to have some news. I want to see price displace up above this swing high to create a market structure shift and then come back down prior to use this fair value gap once again or use this up candle as a breaker. You can see my executions here. I took two contracts at 665 and then got stopped out at 653 for a $50 loss. Now, I was looking through different markets and looking at the Nasdaq versus the ES. We can see that ES did not create a lower low like the Nasdaq did. So there was some divergence on the lows. Admittedly, I would like to trade ES, but because of TradeStation, if I focus on the windows, like right here, I have the focus on the matrix, but if I went to switch it, it will move this around and reveal the account number. But so that's why I went ahead and stuck to the NASDAQ. But I have a solution for that. So in the future, if I do need to switch markets, I will be uh, able to cover the account number up and then go ahead and just switch over. I think ES was stronger and it would have been a successful trade with ES. It did. And you'll see later that ES did take out the highs, but NASDAQ did not. It kind of just fluffed around in this fair value gap right here. So here I'm looking at it, I'm seeing some sort of displacement here. If this candle can close, I have an entry here with a fair value gap, and I will be aiming for the highs up here. This was the London high. And you'll see the fair value gap being adjusted. I was going into lower time frames to look at, there was a very small fair value gap here. Okay, well, I guess it got covered up. So it just went down to the volume imbalance here. So there was no displacement here. So we're getting close to the 930 open. I want to wait to see how that's going to affect the price here. Again, I want to see displacement up and come down using ideally this as a breaker. And let me just go ahead and move myself. Let's go myself up here. But yeah, I want to ideally use this candle here as a breaker lined up with a fair value gap. But you can see how there wasn't any displacement. Prices went down to sweep the lows once again, and now it's digging deeper into the 5-minute fair value gap. I'm thinking that this is probably a total soup right here, and you're going to use the 930 open for a launch up higher. And that's exactly what happened in the ES. So if I was to trade S&P, I probably would be able to keep going to the lower time frame and catch some sort of fair value gap for the highs to get taken out. But Nasdaq, like I said, didn't really do that. It does get above this fair value gap, but after that, it pretty much just waffles around. Getting close to 930, we can see price is accelerating up. So you see here's a small fair value gap that I went down to a lower time frame. I really thought about taking a long here, but I was not able to go push the button on here and I missed it. But price did go take out the highs here and here, and it's going to aim for this fair value gap up here. So going from an entry down here and taking some partials up here, that's 20 points of profit that was I potentially could have made. And here I took a buy, just one contract this time because of the earlier loss. I wanted to reduce the amount of risk I'm putting in. And I'm taking it at 68. So my entry was right here. I went down to the lower time frame and there was a fair value gap. I went ahead and took it because I saw that ES took out the high, so I'm anticipating Nasdaq to follow suit. And you'll see later I'll put here that I think Nasdaq is the sixth sister, expecting it to follow both follow the S&P and Dow Jones. But 10 o'clock there's going to be news, so there could be a volatility injection upward. And this I didn't want to see this. Using this fair value gap here, you can see the body's kind of just overlapping it and then just rejecting. This candle right here does create a long wick, so that gets me a little bit more thinking that I'm on the right track, I'm going to be using half of this wick to measure out any kind of support. I want to see if this body close at or above this halfway mark. You can see a lot of back and forth action right here. So the body did close below it. Not a good sign, but I'm looking at this candle right here as a breaker. You got the low, you got the high, a lower low, and I want to use this as the breaker here. And if you measure from this low to this high, halfway, I want to see price stay above that halfway point. And I was going down to a lower time frame. Here is another fair value gap. I thought this was the fair value gap that was acting as support for the Nasdaq. You see how this candle right here, the body also closed right below this halfway point, the consequent encroachment. That's also not really a good sign. So at this point, I could be taking the trade off right here around break even before the news because it does not seem like any of the discount arrays are being supported. But because of this wick and going down halfway into the breaker, I was hopeful that perhaps it was going to go and follow suit with the yes. And here we have 10 o'clock. Price just shoots down, takes out my stop. I was completely wrong on the Nasdaq this day. And that's pretty much it, folks. So here's the thing. I went ahead and stopped the trade right here, but with this being obviously a big displacement downwards, you could expect, since it's just 10 o'clock, you could expect like maybe like a silver bullet to form somewhere in here and use this high as your stop loss. But since I already had two trades on the day, I went ahead and just closed out the chart, went to the paper trading, and I did paper trade this, but paper trading, it didn't really make up for the loss in the morning. But there was a displacement down and it retraced up. It was a possible trade, but even then, it was a pretty choppy day today, very hard to trade. And here's the spreadsheet. I went ahead and recorded my trade for the 30th. Here you can see I took longs, my entry price, my stop losses, got stopped out. And here, the first trade was 9 minutes and then 25 minutes for the second one. And I made myself a note here telling me that I went in too early. I need to wait for a market structure shift and to go ahead and follow my rules. So I hope you got something out of this. And until next time, be safe.